Welcome to the Stock Market Morning Prep video for Thursday, December 18th. What a day yesterday. Fed Day came out, Federal Reserve came out, and markets loved what they had to say. We rallied hard into the close, and we are up now in the pre-market session. If you remember, I mentioned on Monday, and I think last Friday I mentioned that we're coming into tax selling. We should get some selling coming into the 15th, and on Monday I said we conclude here. And we might get a little bit of up and down going into Fed, but if they like what they hear from the Federal Reserve and Janet Yellen, then we should be on our way to at least a bullish close of 2014. Now, 2015 is a totally different story. However, I don't see anything in the way, and I might say that I'd like to see the close of today higher than yesterday, and I'm going to go through the index. We're going to concentrate just on the index, and I would love to see that we close up, and then I think we're on our way for the targets of 2100, maybe 2120 in the ES. Okay, now we still have plenty of time of trading. We have today, tomorrow, and of course we have a short week next week and the following week. But we do have a bullish bias to the upside, and we have quadruple witching tomorrow, which also a lot of positions start to get squared off, and we had coming off of a short-term bias being short the market. I would suspect that the markets would rally yet again. Okay, so keep that in mind. So far, the analysis have been pretty dead on, and I do see the markets rallying again, and Santa Claus appearing in that so-called Santa Claus rally that comes at the end of the year. Okay, now we do need to hold yesterday's gains. If we don't, and for some reason the markets just tend to roll over like it did the other day, then I think the markets really may be in trouble going into the end of the year. But if you really think about it, Janet Yellen, the Federal Reserve, the Fed chair, pumped trillions of dollars into this market. Do you think that she honestly would say anything that would rattle the markets for the last 2 weeks of 2014? I think not. And I realize that. I'm sure many people realize that. And that was the saving grace to hold off the market from any major downside pressure. And now we're ready to continue our move up. I think the market's challenged the highs and probably top tick the market to make all-time new highs at the end of the year. Now, if you remember, December 31st last year, we closed at all-time highs the last day of trading. Okay, and I would suspect that we do so again this year. Might not be the same day, but right around there we should move higher. Right? Now let's go right into the charts. And you can see the Spiders Daily. We had a critical area. We broke the 50. We broke this area here, which was a big area of support, and that 200 was really in sight. But what's nice about this big move lower, and if you really think about it, I mean, if you really want to say it, you can just look at this as a big, big bull flag from the October lows. I mean, really come down to it. And I like the fact that we unwound all that overbought reading, and now we're back down here where we can actually push higher and really start to challenge these highs. Okay, so let's see what's going on with the Qs. And as you can see, the Qs, same thing. A lot of this movement into the downside are very similar to the 5 indices, except the Qs held up much better. Than the other indices. You can see the 200 is way down here. Okay, take a look at the diamonds. Again, 200 in sight. Now we need to really close above this, make this closing high, and then I think we're on our way. Okay, and I really do suspect that the markets would at least recoup a lot of its losses and be at its highs or make new highs again for this year. Okay, now for the longer term guys, I wouldn't buy the market. I wouldn't be adding to your positions here. To me, I think that we needed a little bit more of a correction. What we had here for a week really isn't a correction, just a short-term blip, and then now we're starting to move higher again. So I keep an eye on the markets going to 2015. Now, for a short-term swing trade for the next 2 weeks, if you could buy some weakness, then I would suspect that that would do well going into the last couple days of trading. Okay, and here's the transports. Transports yesterday were horrendous due to FedEx reporting and their guidance, but actually recouped a lot of its losses as well, but still ended up closing just above the 50-day moving average. That's a very, very good sign. Okay, and lastly is the IWM. Now, as you know, the IWM has been in a trading range pretty much all of November and December. And we have this one large candle back up again. Very, very whippy index. Until it breaks out or break down, personally, I would stay away from the index unless you're really just scalping the index. If you're looking to hold it, this thing is all over the map, as you can see. Now, what I want to see with this is we need to capitalize on this and break out. If we break out of this index and we can see crude oil stabilize like it has been, then I really think that we're going to get a real strong push into the end of the year. So just keep that in mind. I would not be looking to short the market, not now, and I would looking to buy any dips at the moment going into the end of the year. Okay, guys, I hope it helps. Just a quick admin note, no video tomorrow. The morning call videos will resume on Monday. Have a great day and enjoy the weekend as well.